Okay, so good evening and welcome to the fireside chat this evening on public sector accounting and finance as we sort of just spend some time to remind ourselves again the things that we are likely to encounter tomorrow as we go into the exam hall when it comes to public sector accounting and finance. And so, just going to be spending some time and then answering any questions you are having and everything else that we've done already. Just remind you again on some of the few things that you have to be mindful of to put you in the position to go into the exam hall so you can write the exam with confidence and pass the examination. Now, before I get excited, if there are any questions for me, something specifically that you want to pick my brain on quickly, you can raise your hand, I'll bring you up, or you can drop it in the chat for me. So if there is anything specifically that you want to pick my brain on, drop it. Before I get excited, if there are anything. If not to, then we can get goosebumps into the discussion, public sector accounting and finance. Yeah, public sector accounting and finance, it's just like financial reporting, but in the public sector. So the way we do financial reporting in the private sector, that is public sector accounting now. That's the nature now. So we're going to be having the various skirmishes coming in that regard. It depends on how excited the examiner is, but we're going to be having around 60-40 ratio percentage when it comes to the calculation areas. So 60 calculation, 40% written areas, depending on the structuring of the syllabus of the exam generally. So because in each of the segments we are going to have theory issues, or we have theory issues there that the examiner can ask you. Then there are core calculation related issues that the examiner is going to be bringing down deal. So maybe 60-40 depending on how excited the examiner is. But we are not much interested in what ratio is going to be there. What we are going to be excited about and what we need to be mindful of is going to be the structure of the examination and the thematic areas that we need to be mindful of when it comes to topical issues, principles, and concepts at the end of the day. And that is what I want us to, walk through briefly, have some discussions briefly to crystallize some of the thoughts processes in respect of our discussion. And we should be out of here in the next few minutes. So let me bring up my screen quickly and then we can get excited into that. So straight up, I'm coming in from the summary notes that was shared with you. So that's where I'm coming in from. And so page 1, right from there, we're going to be having 5 questions in the exam hall. Question 1, we know already, is going to be on the preparation of the financial statements. That's question number 1, on the preparation of the financial statement. The question we are asking ourselves is, what are the things we need to understand there? We'll come back to that in a moment. But remember, we said in this question 1 area, the examiner can bring whatever he wants, either the central government or a covered entity. Over the last 3 examination diets, what the examiner has been getting goosebumps on has been covered entities in, the various aspects. So we don't know, as you go to the exam hall, the examiner may bring consolidated fund, but the rule is the rule, and we're going to be getting there in a moment. Question number 2 is going to be on the IPSAS, that is the International Public Sector Accounting Standards. And so the IPSAS, done deal, 20 marks coming in the exam hall. What kind of IPSAS the examiner is going to be bringing, that we cannot tell, but we need to know some of the IPSAS. You must understand that it's going to be a mixture of calculation and theory. So in that 20 marks area, it depends on how excited the examiner is. You may have like 6 marks written area, written related IPSAS issues, and then 14 marks coming in from calculation related issues. So it depends on how excited the examiner is. But we're going to be having some theory issues on the IPSAS in the question 2 area, plus some calculation related issues that you must understand. That is question number 2. Question 3 is going to be on the evaluation of financial statement. As we know already, there are 3 approaches, methods, available that we can use to evaluate the performance of public sector entities. And each of them have their own advantages, disadvantages, objectives, and goals at the end of the day. One of them will be in the exam hall. But remember that there are rules that guide each of them and the way we go through them. And we're going to be going through them in a moment. We have the common size analysis. We have the ratio analysis or the budget variance analysis. And so this area, one of these three things will be in the exam hall for us to be able to work ourselves out generally and then do the calculation or prepare whatever statement that has to be prepared. Then from there, we do the various analysis based on the context of the question. So that is question number 3, evaluation of financial statements. And we're going to be coming back to that in a moment. Question number 4 is going to be on public financial management. Primarily, we are focusing on the public financial management cycle, which is budgeting, 10 marks question, and then public expenditure and financial accountability framework, which is also another 10 marks area. So 10-10 for that question 4 area, budgeting, and then PIFA will be there. So the A will be budgeting, the B will be PIFA, whatever the examiner wants to do. Then question number 5 is going to be the regulatory framework and governance in the public sector. Regulatory framework and governance in the public sector. 10 marks each. So the governance in the public sector, 10 marks. The regulatory framework issues, also 10 marks that the examiner will present us in the exam hall that we need to be mindful of. So this is the structure of your examination. What does that mean? It means that all other things being equal, question number 5 is going to be a written question. All other things being equal. Question number 4, all other things being equal, will be partly written, partly calculation because of the PIFA environment. And even under budgeting, I told you about the preparation of the budget, and the examiner can access to prepare the cash budget for an entity. So that's question 4 area potentially is written and calculation. Question 3, definitely some calculation related or preparation of statements and then the analysis. Question 2, calculation and the theory coming in. Question 1 can also be the preparation of financial statements. Then the B aspect of the question, the examiner will ask you a theory question for 4 marks or 3 marks. And you've seen some of these things coming in there. What does that mean on the overall? It means that, as I have told you over and over again, in the exam hall, you're going to be reading all the questions and take out all the theory questions as quickly as possible so that you can save some time on the other question to approach the other questions that will require significant amount of time. But we're going to be coming back probably to see how far I can go with each of these structures. But these are the 5 questions that we are going to be seeing in the exam hall, covering each of the topical areas based on your syllabus. Again, it is about what is in the syllabus, not what the examiner has brought in the last 3 examination dates. It is what is in the syllabus. So let's go down quickly. I'm going to be coming back to these ideas and look at question number 1. So in question 1, preparation of the financial statement area, we know that the examiner is going to be getting goosebumps for us to prepare the financial statement. If you remember, we said we don't know what is going to happen, but the examiner can come for us either for a covered entity, that is a ministry, department, an agency, a metropolitan, municipal, or a district assembly. So it could be a ministry, a department, an agency, a metropolitan, a municipal, a district assembly, or other state enterprises, okay, or other covered entities. It could be a school, a public school, it could be a public hospital, or something like that. Or the examiner will do us favor and go to the central government environment. In the central government environment, it means we are doing consolidated fund. Wherever environment we are, if we are going to be preparing the financial statement, we need to be mindful. Now, remember also that the examiner has some choices. Yes, over the last 3 examination dates under this new syllabus, the examiner has been doing the ordinary, which is for students to prepare statement of financial performance and then statement of financial position or revoir mon ami. But you know that in addition to the statement of financial performance, statement of financial position, we also have the cash flow statement. Ipsos 2, the cash flow statement. So the examiner can ask us to prepare the cash flow statement. And we discussed this, solved questions about it, and explained the various things you must understand when it comes to the preparation of the cash flow statement. So although the last 3 examination died, the examiner has been focusing on statement of financial performance, statement of financial position in your syllabus. As part of the financial statements prepared in the public sector, the cash flow statement is another thing. So the examiner can spin it up for 20 marks and ask you to prepare the statement of financial performance and then the cash flow statement, 10 marks each. Or like the question we solved during our mock discussion, the cash flow statement and then the statement of receipt and payment, which is like the cash book in the public sector. So styling of questions about that question 1 area, either the examiner will go what he has been doing in the last 3 examination diet, financial performance and position, or the cash flow statement and the preparation of the receipt and payment account. Why am I highlighting this or drawing your attention back to this? So that in case you have not reviewed again the cash flow statement preparation and the statement of revenue and receipt and payment, you make sure you review that, because it is in your syllabus and the examiner can bring that in the exam hall. Now, if we are going with the issue in respect of the covered entities, then our revenue items will have different scenarios. And this is where the topic revenue management and expenditure control will come in. So for all covered entities, their revenues will be categorized into DC. So that is decentralized transfers, monies they receive from the central government. Then internally generated fund, IGF, the money they generate by their own operations. So the IGF will depend on the type of organization in question. If it is a public school, then their IGF will be tuition fee, admission forms, stationery that they are selling, maybe hostel fees. If it is a transport entity, then their IGF would include the fares they take, the luggages, okay, and then packages that they deliver. All of those things could be part of their IGF. If it is a public hospital, then admission, card, laboratory, medicine, money at the pharmacy, all of those things will become their IGF. So it depends on the type of covered entity and the categorization of the item. Remember here, if you miss the classification, yes, your final answer may be right, but au revoir, mon ami, you're going to lose significant portion of the marks. So the classification of the element of the items is very important, because if something is supposed to be a decentralized transfer and you put it under IGF, you toast it. Yes, your total revenue figure will be correct, but your decentralized transfer figure is wrong, IGF figure is wrong, and that is going to go a long way to affect you. So be careful about the classification of the items so you don't screw it up. So decentralized transfers, IGF, then we come in with donations, okay? Grants and donations. They receive donations as well, right? So these will be the revenue that will be coming here for us when we talk about the covered entities. But for the central government, we know already, if we are in the consolidated fund environment, then we are dealing with direct taxes, right? Indirect taxes. What else? Non-tax revenue, NTR. And then government also receives donations, right? Donations in that regard. So these are the things that we must understand in that particular case for the central government environment. Please, sometimes the examiner doesn't want to sweat. What does that mean? It means he will just put in the trial balance direct tax, indirect tax, but oh yeah, no, it means you're going away. However, the examiner can, test your pulse. So he's going to list the individual item. Oh, corporate tax, PAYE, gift tax, communication service tax, VAT, exercise duty, you must know which one is a direct tax, which one is an indirect tax. Musuo Ball, you go and put gift tax under indirect tax. Congratulations. Your total revenue figure is correct. We won't fight you for that. But your direct tax revenue, au revoir mon ami. Indirect tax figure, au revoir mon ami. And that au revoir mon ami can affect you a lot, even going into the statement of financial position. So that is the idea there. And I think that will be a good environment for the examiner almost all the time in the central government environment, where you want to test students, whether they know the elements. I think I was saying this in the other subjects, that the objective of the examiner is to drive students' attention on key areas of the syllabus. So every examination that the examiner has an objective. So that is why if you rely on the past questions and you try to go to the exam hall, you may be burnt out. Why? Because the objective of the examiner in each examination that is different. So maybe the examiner wants students to draw their attention to learn certain topic, look at certain areas of the syllabus. So he will do it. So the last 3 examination dates like this, the examiner wants students to understand covered entities, because that is where really people are going to be. The central government, that one, it will be done by the Controller Accountant General. So it looks like there is no much thing there. But the covered entities, the MDAs, MMDAs, other covered entities, that's where when people chatter, they're going to be working more there. So no wonder in the last 3 examination dates, the examiner has been focusing on covered entities. It is to draw students' attention to learn the nitty-gritties about the covered entities. Now, if you die on that mountain, then you will go tomorrow in the exam hall. Then the examiner will say, okay, how about the central government? How are students learning that? Then he hits you with the consolidated fund. Why? It is in the syllabus. And that is where you see unintelligent and ill-prepared students. They come and say, oh, what I learned didn't come. No, you suck. You didn't listen to the syllabus. You didn't cover the syllabus. You learned what you like. So please, it's a whole package. But when it comes to the expenditure side of things, there's no problem. Whether we are in a covered entity or we are in the, your friend is saying, central government, it's almost always the same. Compensation of employees, goods and services, interest on debt, consumption of fixed assets, and all of those things, right? The only probably exclusive thing that I may highlight for you when it comes to the central government is that we may have grants or statutory transfer in the expenditure aspect for the consolidated fund. Because the central government gives grants, the central government from the consolidated fund is supposed to make some statutory transfers from the consolidated fund to the Ghana Education Trust Fund, the Road Fund, and all other funds, right? Government is supposed to at least send 5% of the total tax revenue to the District Assembly Common Fund. That is a statutory transfer. So when we are in the central government environment, those statutory transfers will be expenses that we have to be mindful of. And certainly the rest of the things are going to be, taking care of themselves at the end of the day. And that's what we need to understand in the preparation of the financial statement. However, because for the most part, we are going to be preparing the financial statement using the accrual basis, but I need you to be careful to know the basis of accounting we are using to prepare the financial statement. If it is a cash flow statement, we don't need a miracle, because in cash flow statement, we will use the cash basis of accounting. So any outstanding item, any unearned revenue, that will not come if we are doing cash flow. But in the statement of financial performance and position, we may be using either the full accrual basis of accounting or modified accrual. which is what the Controller Accountant General used in the preparation of the financial statement for 2024. And we've spoken about this over and over again. So be careful, because if we are using the full accrual, no problem. If there is any revenue outstanding in the notes, it will be added to whatever revenue item, and then put into trade receivables. If there are any expenses outstanding in the notes, no problem. They will be added to the individual expenditure items, and then they will be added also to payables in the statement of financial position. That is a full accrual basis. But if we are told that the entity is using modified accrual basis, here it means the entity is using two different bases of accounting. It means they are using cash basis and then the accrual basis. Why is that? It means revenue is recognized on cash basis and the expenditure is recognized on accrual basis. So you have to be careful. And the examiner will tell you this all the time. So after dealing with all the trial balance issues, the first footnote and the second footnote will tell you about the basis of accounting they are using. So that if we are using modified accrual basis, then any revenue item outstanding in the notes that is due the entity or due the government but has not been received yet, eba. Why? Because revenue is recognized on cash basis. So any revenue outstanding in the notes, we won't bring it into the financial statements. If anything, they are just disclosed in the notes. However, expenditures are recognized on accrual basis. For that reason, any expenditure owing in the notes will have to be adjusted for and added to the payables as well in the statement of financial position. So this is very important, because if you screw the basis of accounting up, it means you're going to screw the notes also up if we have notes in the financials, if we have notes to the financial statement. Sometimes the examiner could be generous, everything will just be in the trial balance. So there will be no notes we have to work on technically. Sometimes it means that the trial balance will be quite a lengthy trial balance, and that's all. Somebody just said, oh God, let that be our story. Don't worry, such prayers are not in the books of God. Just prepare and go and learn. That's all. So that is what we must understand there when it comes to the basis of accounting. This is the central idea that is going to hold us on the preparation of the financial statement. Aside the basis of accounting are the key IPSAs that will be featuring in the preparation of the financial statement. So if we are going to be dealing with the statement of financial performance and position, then the notes, we have to deal with some IPSAS issues. Primarily, IPSAS 17, property, plant, and equipment. IPSAS 12, inventory. You know that inventory is carried at lower of cost and replacement costs if the entity uses the inventory in the day-to-day running of the organization, or they distribute it for free. However, if the inventories are sold by the entity, then they are going to be carried at lower of cost and net realizable value. That's the idea there. So IPSAS 12, very crucial there. Then IPSAS, the revenue IPSAS. IPSAS 9, revenue from exchange transaction. And IPSAS 23, revenue from non-exchange transaction. Because if there's any grant issue in the notes, that maybe we have done the work, but we've not received a grant, or we've received a grant, but we've not satisfied the condition to the grant, we've explained how all those things are supposed to be treated. And that is as per IPSAS 23, revenue from non-exchange transaction. If somebody donated an asset to us, to the entity, to the government, how do we account for that in the financial statement? We spoke about all of these. That assets donated, we determine the fair value of the asset at the date of the donation, and the asset is going to be debited to our infrastructure, property, plant, and equipment. Then we will credit grant and donation, meaning add it to grant and donations. So those revenue items, very crucial, plus the last one, which is the IPSAS 10, construction, because these are the three revenue transactions or revenue standards that you must understand. If you remember, I told you that for the purpose of current development issues, you're not going to see that in the exam hall. But from next year, these three are replaced by IPSAS 48, which is merging all three into one accounting standard. And it's the same thing, just with some little additions at the end of the day. So IPSAS 17, IPSAS 12, IPSAS 9, IPSAS 23, IPSAS 10, construction contracts, generally at the end of the day. And certainly IPSAS 19, provisions, contingent liabilities, contingent assets. Now, there could be other nuances in the notes. It's just like FR, right? Financial reporting, the footnote that the examiner is going to be throwing at us. We have to apply accounting standards to be able to deal with some of the footnotes at the end of the day. But on a core level, 17, 12, 9, 23, maybe 10, and then 19, provisions, contingent liabilities, contingent assets. So that is our question one area, and what we need to be mindful of, and the key issues that we must understand when it comes to that preparation of financial statement area. Remember, I told you this should be your last but one question. Remember that. Right. After the FR examination, I got called with some of the students. And somebody was telling me, oh, it already is. Oh, sure. As soon as I saw the consolidation question, I thought that I could answer it, and then I started it. But later I realized that I couldn't do anything. I wasted time. And this one there, I'm on the scene line. Oh. It's likely that I won't make it. You can search them more. Because you go to the exam hall tomorrow and go and start with the question one. Go and do the financial statement preparation. Start with it. I will knock your head in the realms of the spirit. You see that you hear go. You see that your head will be just doing you. Why do you cause pain to yourself? Why do you want to sabotage your own life? Ya can't say much though. Jayo, menyo. We say, hey, I wanna make up. So tomorrow, if you get to the exam hall, just answer question one first. Okay? Let that be your first question. So that's the idea there for question number one in that particular case. Give me a sec. I think my software is. Okay, let me see if I can bring back my slide. I hope you're gonna. What the heck? Will you open in an existing file? Please give me a sec. Oh, my neighbor. ICAG Bailey. Oh God. Please give me a sec. I got to change my flow. Give me a sec for privacy purposes. I want to just reopen the file, but I have to just hide my screen to make sure I'm not showing what I'm supposed to. Charlie, me pentem where that's same. All my apps have ceased automatically. Okay, yeah, it's coming. 2025 public sector key summary. Hey, if you see you, Please give me a moment. I can't access the file again. I want to bring it up so that. Please give me a moment. Can you drop? No, the second one. If you can airdrop, then you airdrop. If not, then just put it on. That's some crania. Oh. Oh God. I'm receiving. What's it? I don't know. Maybe I have to. Okay, so let's go. I think I found my way around my slide. There we go. So that is question number 1 and the nuances that we must understand there. Let's go to question number 4, which is where we're going to have budgeting and PIFA 1010 area. Quite a huge area, right? Especially the budgeting. There are a lot of materials there that we must understand when it comes to the public sector budgeting area. Just a lot of things. So let's walk through a number of things quickly. Remember I told you that there is a one-liner definition question that the examiner can ask you. The difference between the concept of planning and budgeting, right? And we discussed this at the end of the day. The key characteristics of budgeting that, hey, annually it shows the government estimates its of revenue and expenditure. Its, objective is to maximize the welfare of the citizens. Certainly, it's a legal document binding on the central government, and it serves as a tool for accountability, right? So you saw before the Public Accounts Committee, one entity like the Electricity Company of Ghana, when they came before the Public Accounts Committee, they had ballooned and spent gazillion amount of money above what has been budgeted for, right? Without the board approval. Okay? And they will finish and come and say they want increment in tariffs. One useless managed firm in the country. Because you don't know how an entity of that nature could have some of these labs there. Very, very useless management of the company. But that's just by the way. And so those are some of the things we spoke about. Then the limitations of budgeting. We discussed these things. The fact that there is a misconception between the budget authority, right? Spending the budget and spending to the budget. That's one of the limitations. The unpredictable assumptions, right? Time involved, all right? Maybe next 2 weeks or so, the budget for 2026 is going to be prepared. They are even finished doing everything, but they are still holding some, workshops and seminars and series to take input from people generally. But they know what they are going to do already, but it's part of the things. But an area that the examiner, I told you, may get a goosebumps on will be the legal regulatory framework. And we discussed these as well, right? The Constitution, the other things like the Public Financial Management Act 2016, Act 921 as amended, and then the Financial Regulations 2019, LI 2378, and other relevant acts. What do these acts tell us about budget preparation? Very important. Then the roles and responsibility of key stakeholders in budgeting. This is like governance in the public sector, the role of the key public officers. But we mentioned that we have to be careful about the context of the question if the examiner so wish to bring some of these key public officers or institutions. Because if it is just generic for us to state their responsibilities or their roles, then you can go and do your thing as far as possible. But the examiner can specifically ask you to talk about the roles of the Minister of Finance when it comes to budgeting, principal spending officer, principal account holders when it comes to budgeting, the role of Parliament when it comes to budgeting. So you got to be careful about those things as well. We spoke about this. Then thematically is the budgeting cycle. And that's a dance floor that the examiner can dance a lot, and we discussed this also in much detail, right? And we mentioned that the examiner may not, which we don't expect, say, oh, describe the budgeting process. He could for 10 marks. He could. But what the examiner could get goosebumps on is to pick parts, okay, phases, and ask you questions in respect of each of the phases. So we have the budget formulation phase. What happens there? The key issues we spoke about. Preparation of the fiscal strategy document, issuing of a budget guideline, the uses of the budget guidelines, the importance of the budget guideline, and certainly preparation of the annual estimate by covered entities and the consolidated estimate by the Minister of Finance. So that is the step number one, budget formulation. At that level, the examiner can pick and ask you some questions on the budget ceilings. The examiner can pick and ask you a question on the fiscal strategy document. The examiner can pick and ask you a question on the preparation of the annual estimates. So these are the thematic issues there. Then we come to the budget authorization and approval. And we said at the local government level, they're going to prepare their budget in accordance with the budget ceiling that has been issued by the Minister of Finance, and the budget guideline issued by the Minister of Finance, and they will pass a resolution. The resolution plus their budget will be sent to the Regional Coordinating Council. That will be put together into the regional budget, and that will be sent to Minister of Finance in the preparation of the national budget. But we also mentioned that when the national budget is put together or is being put together, the budget office at the Ministry of Finance is going to hold a budget hearing. So a question can come, the importance of budget hearing or the reasons why the Minister of Finance or the budget office at the Ministry of Finance holds a budget hearing. And we said it is for the principal spending officers and principal account holders to come and defend their budget. It is also to determine whether their budget align with the fiscal strategy document or the objective of the government. It is also to check whether their budget is continuing from their plans that they are currently working on, because we use the medium-term expenditure framework in the preparation of our budget, which means that although you are dealing with a budget of 2026, it has in it a continuation from 2025 and something into 2027 and probably 2028. So government is a continuous thing at the end of the day. Then after that, if everything is right, the draft is prepared, sent to the president, cabinet, they look at it. At that level, the president, they can change some things. If the president is satisfied, then an announcement is made, they send it to parliament, the budget is going to be read, and the various committees in Parliament review the budget estimate, issue reports. The reports are brought to the preliminary, which is the Parliament House, and they debate on it. Hey, we agree on this. Micro minority, minuscule minority, majority, whatever they debate. Those for it say aye. Those for it say no. The ayes have it. Then we pass. So that is the issue there. So on that approval and authorization, if the examiner wants to come for you there are a lot of things that he could come for us in that area. Then we come to the budget execution. This is the implementation of the budget area and the various things that are done there. Reporting and evaluation comes there, which is going to be including the mid-year review, supplementary estimate. Why does the Minister of Finance present a mid-year review? What are the reasons for supplementary estimate? These are all questions that the examiner can throw at you in the exam hall, and we've discussed all of these things in much detail. Then the concept of environment, reallocation of funds. What are the rules, principles governing environment? It's also another styling of question that the examiner can bring to us in the exam hall that we need to understand. Then certainly the last part will be the methods or approaches of budgeting. Incremental budgeting, zero-based budgeting, activity-based budgeting, and those approaches. The advantages and disadvantages, there are areas that we must know about in that particular case. So when it comes to budgeting, that's it. So the examiner has a lot of options at its disposal. Either going to come from the introductory issues, difference between planning and budgeting. That's a 3 marks question the examiner can ask you. Objectives, limitations, then the cycle itself. Each of the phases, the examiner can just pick a segment and ask you a question about it. Or we get a question also coming in from the legal regulatory framework of budgeting. So what are the laws? Then you explain what the laws say about budgeting. Then the roles of the key public officers and institutions involved in budgeting. So there's a lot here at the disposal of the examiner. And we've discussed all of these things. So for that 10 marks area, these are some of the things that we need to be mindful of under budgeting. Then along with that is the Public Expenditure and Financial Accountability Framework, PIFA. 10 marks is waiting for us in the exam hall. And we mentioned that when it comes to the PIFA, the examiner has a number of options at his disposal in the questioning. On the theory side of things, we could be asked questions about the critical performance dimension, the 6 critical performance dimensions, or the pillars, the 7 pillars. And I told you that you got to pay attention to the critical performance dimensions and the pillars. Got to be careful. They look alike, but there's a little difference between them, and we discussed these in detail as well during the revision session. Then the objective or purposes of the PIFA framework, the limitations of the PIFA framework. So all these are written questions that the examiner can bring under the PIFA. Or what the examiner would like to do is to do something calculation related. If the examiner wants to do something calculation related, then he may ask us to prepare the statement of budget performance. You remember this. We are preparing the statement of budget performance, but in the PIFA environment. And so you remember that we said in that case, then the pro forma is going to be looking like this. So there's the statement of budget performance. We have the original budget. We have the revised budget. You know the difference between the original budget and the revised budget. The original budget is what was sent to Parliament, or what will be sent to Parliament by 20th of November or so. That's the original budget. Now, during the mid-year review, there may be supplementary estimates that may change the original budget. So the supplementary estimate adjusting the original budget gives us the revised budget. In some questions, we wouldn't have any supplementary estimate, so we just have the original budget. We compare that to the actual, we get our out-10. Remember we said that out-10 at this level is going to be, give me a sec, yeah, out-10 at this level is your budget minus actual divided by the budget times 100, because we want out-10 in percentages. The revised budget is the original budget plus or minus the supplementary estimate. The reason why it is plus or minus is because there could be variance. So that money meant for something in the original budget is now being reallocated for something else. It means the revised budget of that item will be reducing. So you got to be careful about the supplementary estimate and how you deal with it. It could be plus or minus depending on the context of the question. Now, once we get the out-turn in percentages, we now bring the score. If the examiner wants to dance like this with you, bring in the statement of budget performance in the PIFA environment, he will give you the scoring guideline. It will be part of the question. So that if something is like the question we solved in class, if something is about 5%, oh, maybe it is A. Something is between 5 and 10%, it is B. Something is between 10 and 15, it is C, in that order. Do you get the idea? So that is the first styling of calculation-related question. The examiner has not come here yet. It's one of the questions pending in this new syllabus. So I don't know tomorrow if the examiner wants to go there, but you know the rules. That's one of the options. The second one, which the examiner has brought, I think twice in the last 3 examinations that it's grappled, has been evaluation of the pillars using M1 and M2, the weakest link, and then the average method. So the examiner has brought these as shadow questions, not really like comprehensive questions. Yeah, these are just shadow questions that he has brought. But this is the scoring methodology. So we said if we are in the weakest link, M1, then we're going to use the alphabet, A, B, C, D, E. Now, what is the weakest link about? Because it's a one-liner question the examiner can ask you. Define the weakest link, define the average method. We spoke about all of these things. Now, the weakest link methodology happens in an environment where a positive indicator is cancelled by a negative, or a positive dimension is cancelled by a negative dimension in the same indicator. So that is the weakest link. But in the average method, this is where we take the average of all the dimension in an indicator to then score it. That's the idea there. Now, if we are in the weakest link M1, the rule is simple. We start the numbering using the lowest score. Now, you got to be careful about lowest score here. So, for instance, if we have something and it is C, B, A, maybe there are 3 dimensions in the pillar, C, B, A, and we are using weakest link, the lowest in these 3 is C. Because if you check the scoring rules, A is higher, B is the next higher, C is the third higher, D is the lowest. So in these 3, C, B, A, the lowest is C. So we start the scoring with C. Now, if there are other higher scores, then we add a plus to it. Now, in my example here, there is B and A, which are higher than the C. So my score for this example here will be C plus. But it is still C, so it's average performance. But if you don't bring the plus, you toast it. That's one thing you must understand when it comes to the weakest link. That means your score is wrong, but your interpretation is right. So you get half of the marks, or maybe 1/3, depending on the objective of the marking scheme. But that is the weakest link concept. In the average method, we're going to use the the numbers. And so in my example here, A is 4, B is 3, C is 2. So if you add it up, that is going to be 9. So 9 over 3 is going to be 3. So my final answer is 3. Where does 3 fall into? B. It means in the average method, my score will be B, which is a good performance. So that is the difference between the weakest link and then the average method. And A or 4 means very good, BBIFI. B or 3 means good. C or 2 means average. D or 1 means you suck, poor. That is the idea about the second aspect of the PIFA calculation related question. So if the examiner is going to come for us in calculation in PIFA, then he's going to do statement of budget performance or do this weakest link average method. Which one is he going to bring when he gets to the exam or tomorrow? You ask the examiner because he has the answer to that question, which will be the paper that will be given to you. But that is the idea about the PIFA framework. Now, when it comes to the statement of budget performance, it means that we are going to analyze the results, because when you finish preparing the statement of budget performance like this, it has to be interpreted. And so we mentioned the guiding principle that we must be mindful of when it comes to the interpretation. And I believe that by now you've gone over, especially for those of you who wrote any interpretations, I had you on a call, please go over the things you did and the things that I pointed out to build your base on the interpretation. Whether I like it or not, you write an analysis in the exam or anyways. The PIFA is just a bonus area. But we know we will write analysis in question 3, which is evaluation of financial statements, and I'll come there in a moment. But that is the idea there. So what's the guiding principle? We briefly explain the score. If it is A, it is very good. Okay, why is it good? If it is C, it's average. Why do you think it's average? So give us some possible reasons. Then the third one is where I said sometimes everybody cannot, dive deeper like that. But it's good because if you're able to go that level, it tells the examiner that you're a good student and you understand what you're doing. And that is to state the implication of the outcome on the entity's operation, or if we are in the central government level, then on the economy as a whole. So what is the implication? Based on the reasons you gave, what are the implications? And these are the things we must understand when we talk about that question 3B area. Question 4B area, PIFA framework. So the 10 marks that is going to come tomorrow, either we will go with these theories or the calculation swag, or the examiner will share the two and some theory, some calculation, but he has only 10 marks for that. So he can do some share. Maybe some 3 marks question on theory and 3 marks question on the calculation related area. That's actually what he has been doing in the last 3 examination dates. Some little skirmishes on the calculation that I said earlier, M1, M2, just little skirmishes. And then some theory areas also have been coming in because the examiner again wants that balance at the end of the day. But if the examiner wants to really dive deeper, then he could bring the statement of budget performance fully as the 10 marks question area, because after the preparation, you need to analyze. So the preparation plus the analysis will then add up to the 10 marks area for the PIFA framework. And these are the things we must understand in respect of the question 4B, budgeting, or question 4, budgeting, and then PIFA. Very sweet, simple, straight to the point. Oh, come on now. All right, let me see if I can bring back my slide quickly. Then let's go to question number 5. Question number 5. That's same crania. Oh. Yeah, just import again, since you don't want to. So we go to question number 5, and that is going to be the legal regulatory framework as well as the governance in the public sector. So give me a sec. Let me go into my slide on that. Okay, since I'm here, let me talk about this, then we go. Let's go to question number 3, the evaluation of financial statement area. Let's go to question number 3, then I'll come to question number 5, the next one. So 20 marks, question 3, evaluation of financial statement. And as we mentioned earlier, the examiner has a couple of options available. Either we're going to use the common size analysis, ratio analysis, and we'll get into all this in a moment. Now, in the common size statement, there are 2 options available at the disposal of the examiner. He could ask us to calculate or prepare the common size statement of financial performance or position, or he could prepare it, present it, and ask you to write the analysis like he did last semester in the financial reporting examination. Okay, so we could have the common size presented. Then the examiner will say, analyze for me. And you know the rules already that if we are preparing the common size statement of financial performance, usually the total revenue becomes the base item. And what we are doing in the common size statement or vertical analysis or vertical statement is we are just changing the financial statement and express them in percentages. And unless otherwise something is mentioned, in the statement of financial performance, the total revenue becomes the base amount. So each line item is taken as a percentage of the total revenue when we are in the statement of financial performance. In the statement of financial position, the total asset becomes the base amount. Unless otherwise, the examiner asks us to use something different. If not, that's going to be the base amount in that regard. Now, aside the preparation, the most important thing is the way we do the analysis. And if you remember, we said we're going to be using the same guiding principle. So we said we explain the percentage change for each item. Okay, so if it is direct taxes, direct tax represents 20% of the total revenue. Okay, we can see that. Why is that the case? Identifying the reasons for the change. This could be due to A, B, C, D in that regard. Then what is the implication? Because if tax revenue, both direct and indirect, of total revenue, government is getting like 40%, that's not much because taxes should be the primary source of revenue to the government. So what is the implication of that? It means that government may have to borrow money in that regard, or government may have to lobby for some donations to come in to be able to fund the activities of government at the end of the day. So that is something that we must understand generally when it comes to the preparation, when it comes to the analysis. Oh no. Give me a sec.
That he looks terrible, that New York has zero chance of success or even survival now. And then once it was confirmed that he actually won, Trump posted simply saying, and so